Welcome to Tax Talk UK. Today I'm going to talk about self-assessment tax returns and explain what this is. Before I do, if I could just ask you to take a moment, please, to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information should you need to, as well as finding other information that we have available to support you in your self-employment across our playlists. So back then to self-assessment tax returns. So this is a system used to calculate your tax and national insurance liability. If you are an employee, for example, or receive a private pension, your income, of course, is what we call taxed at source. That means that before you actually receive your pay or your pension, the tax and any national insurance liability is already deducted. But if your income isn't taxed at source, then the income is taxable, then HMRC need to know about it so that your liability can be calculated. And this is where your self-assessment tax return comes in. So it could be even some people who are taxed through the PAYE system, if their income is more complex, may still need to complete a self-assessment tax return, or if your income isn't taxed at source, if you're self-employed, or if you have income from rental properties. These are just some examples of the times when you would be required to submit a self-assessment tax return. As the name suggests, the self-assessment tax system allows HMRC to calculate your tax and national insurance liability based on the information that you tell them, hence why it's called self-assessment. It's really, really important that all of the information that you submit to HMRC on your self-assessment tax return is accurate, and that you've correctly applied any allowances and exemptions that you're entitled to. And it's important to know that just because your tax return has been accepted and you've paid your liability doesn't mean that anybody at HMRC has scrutinised your return or looked at the information in any detail. Assuming that you submit your tax return on time, HMRC have 12 months to be able to open an inquiry into that tax return. If an inspection is an inquiry is opened, and during the course of their investigation, HMRC suspect that you may not have been paying the right tax, they are able to look back up to 6 years if you've made any careless mistakes in your tax return, or, for example, claimed for incorrect items that you shouldn't have done, or applied allowances that you shouldn't have done. If, however, they have cause to suspect any deliberate tax evasion or anything dishonest has happened, then HMRC are actually allowed to look back up to 20 years of your tax return. So hopefully this helps to understand why it's so important that the information is accurate, so you know that the correct tax has been paid and you're not in the future going to be reassessed because you've made mistakes. So we talked about earlier the PAYE system, which is where HMRC issue a tax code which tells your employer or your pension provider how much tax in effect to deduct. And it's important to note that whilst there are mechanisms in place that allows liability to be transferred between the self-assessment system and the PAYE system, they are in essence two completely different systems, and the interaction is is not always as good as it should be. So if you do, for example, submit your self-assessment tax return and ask for your liabilities to be collected through your tax code, that's followed through, and that you clearly understand what liabilities are being collected in which way, whether you're paying it through the self-assessment system, if you transferred it to your PAYE tax code for the following year, that when you do that tax return, that you do include that balance, because otherwise things can become very muddled and very quickly confused, and liabilities building up very quickly. Because it is possible to inadvertently keep transferring the liability from one system to the other, which means that you potentially feel that you've paid all your liability, but you haven't. So if you do transfer the liability from self-assessment to PAYE, that it's really important that you do keep an accurate record, and that you do completely understand what liabilities are due, and make sure that they are paid. So if during a tax year, which is the 6th of April to the 5th of April, you have any income that hasn't been taxed at source, or perhaps your income's been a little bit complex and you would like to complete a self-assessment, just to ensure that everything is correct, then these are some common reasons why somebody may need to submit a self-assessment tax return. So if you receive more than £1,000 of income from self-employment, so you may be aware that if you turn over less than £1,000, then you are exempt from submitting a tax return. That is turnover, so that is not to say that you've made less than £1,000 profit. That is literally you have taken less than £1,000 from your customers. If you have income as a director of a limited company, or income from renting out property, if you have sold property that has not been your private residence entirely for the entire time that you have owned it, then you will need to complete a self-assessment tax return, as well as if you have income from overseas, or if you receive income from a trust or estate. So these are some of the common reasons why somebody may need to submit a self-assessment tax return. And there are also some other reasons. So there may be some tax allowances or exemptions that you would need to submit a self-assessment return to claim. If you are subject to the high income child benefit charge, you may also need to submit a self-assessment tax return. If HMRC are aware that you need to submit a self-assessment tax return, they will send you a notice to do so. But if for any reason you think that you may not have been taxed fully on all of your income, or you've got income that hasn't been taxed at source, then you should check whether you need to submit a return. And as I mentioned previously, sometimes if your tax affairs are complex, or you have perhaps a complex tax code, you may wish to submit a self-assessment tax return, just so that you know that all of your allowances and exemptions have been applied, and all of your tax, all of your income has been taxed correctly. If you have underpaid tax at some point, you will be asked to pay that, so it is better to know about that, and to know at the end of the tax year that your liabilities have all been correctly paid. An important thing to note is if you are sent a notice to complete a tax return by HMRC, and you don't believe that you do need to submit a self-assessment tax return, then you must contact HMRC on the self-assessment helpline and notify them of this, so that they can cancel that request for the tax return. Otherwise, it will be assumed that your return is due, and if it's not due by the deadline, you will start to incur penalties So don't please just, if you think you don't need to submit a return, please don't just assume that it's okay to ignore it. It isn't. You will incur penalties by doing that. So the first time that you need to submit a self-assessment tax return, you will need to register that information with HMRC. If you are submitting a tax return because you are self-employed, and you've already registered as self-employed, you will already have a UTR. If you previously had to submit a tax return or being self-employed, then you will already have a UTR, and your UTR is your UTR for your entire life. So you wouldn't have a new one, but you will need it to have a UTR in order to submit a tax return. You will need to register for a gateway account to be able to submit your self-assessment tax return, or engage a tax agent to submit this for you, which is highly advisable if you're not completely confident in what you are doing. Of course, if you are engaging the help of somebody, then please do make sure they are qualified for what they're helping you with, and that they are a member of the professional body if appropriate, and they do have professional indemnity insurance. If you intend to submit your HMRC, your self-assessment tax return to HMRC online, or your agent is doing that for you, then the deadline ordinarily is the 31st of January of the year following the the end of the tax year. So the tax year ends on the 5th of April, and the return would be due by the following 31st of January. It's important to note that the 31st of January will also be the deadline to pay any liabilities that are due. So, of course, if you can do your tax return earlier, and then that will let you know, and you have more advance notice of how much your liability is, and be able to find the money to pay that, particularly if you haven't been able to make provision for that from the income that it was incurred from. It's important to note that there are some circumstances where you would need to submit your tax return earlier if you are planning to submit a paper return, or if you do want to switch your liability over and have it collected through your tax code, then you would need to submit your return earlier too. If you are having difficulty paying the liability, or you're concerned that you may not be able to pay the liability, I would strongly suggest that you still submit your tax return on time, and as soon as that's submitted and processed, and the liability is showing as outstanding on your account, then contact HMRC to let them know that you are experiencing difficulty, and ask if you can have some help, either perhaps a time to pay arrangement depending on your circumstances. But if you simply don't submit the tax return, that won't make any difference to the fact that you will be charged interest on any overdue payment. HMRC won't know that you haven't submitted your return because you can't pay your liability, and you will still incur penalties for the late submission if it's not submitted by the deadline. So please, if you do have any difficulty making the payments for your liability, please don't delay submitting the actual return. Get that return submitted, and then work with HMRC to come to some solution for the payment. If you don't submit your tax return, your self-assessment tax return on time, or pay the liability on time, you will be penalised for this. You will automatically receive £100 late filing penalty the day after your tax return is due. After 3 months, if you still haven't submitted your return, you will then start to incur a daily penalty of £10, and then you will then receive further penalties if 12 months after the due date your tax return still isn't submitted. then you would have received incurred £1,600 in penalties. So you can see that the penalties will quickly escalate. So it's really, really important to have your return submitted on time and have the payments made on time, because you will incur interest for overdue payments and penalties for late payments if they aren't done with HMRC agreement. So hopefully this helps you to understand an overview of what the self-assessment tax system is, when you may need to do a self-assessment tax return, and of course, if you need to, if any of this is confusing for you, or you're not completely confident in the information and you're not confident that you can submit the information accurately and timely, then please do engage some help to do this, making sure that the person is qualified for what they're helping you with. So hopefully this has been helpful. Please do like the video if so, and please do subscribe to our channel to find other information, answering your questions and providing general topical information on issues that will help you and aim to support you in your self-employment. Thank you. Goodbye.